Guys, welcome to the market channel. So today I'll be walking you through on how to go about a futures trade on the Binance. So let's get started. So I make this new account on Binance. I registered it just for the purpose of this video. So first you need to do, you go to your wallet, you activate your futures account. So you are using a USDT. So you activate the USD futures, and if you are using coin, maybe like Ethereum, BTC, to be placing your trades, you activate the coin futures. So for the first one, you activate it, open account. So that one is now existing. So second one, so you can also activate this one too. So now, and then I have the account, the futures account. So what I need to do next is to transfer my funds. So let's assume now I'm transferring USDT to my USD futures account. So I'll make sure that I have USDT in my spot balance. This is my spot balance. I'll make sure there is USDT in my spot balance. So after making sure, then I'll press transfer. Click on transfer. Then from spot balance to USDT. Can you see? From spot balance to USD and futures. Then USDT is there. Then I'll press the amount of USDT I want to transfer, maybe $100. Then click on transfer. So the money will move to your futures account under here. So you'll be seeing it in your wallet balance. You will see there. So what you need to do next again is now go to your trade. Let's assume I want to place maybe NG, ENJ, ENJ. Look at it. You see spot at the upper part. So you now swipe to the futures. You choose futures there. Can you see for spot futures? So you now click on futures. After you click on futures, so they have NGUSDT perpetual. So you click on it. So once you click on it, this is the chart. But so let's assume now I've analyzed my market, I've analyzed the chart, and I want to buy NGUSDT currently now. I'll just click on buy. When I click on buy, you see this interface. Or if you want to sell, click on sell. It will still show this interface again. So what you need to do now is, for you, if you click on this cross, you will see isolated and cross. That cross means that if you should place any trade with cross, it means your balance, if the balance, like if the amount you input for the trade, let's assume now you place a trade now, the trade was $50 and you use cross to place it. That means that if that $50 should liquidate, your balance, your remaining balance will be used to run the trade for you, to keep your position for you. That's for cross. That is, once the amount you entered for that trade is liquidated, your balance will be used in keeping that position to continue running the trade. That's for cross. But if it's isolated, let's assume that the cost of that trade is $50. That means that if that $50 should liquidate, your balance will not be used to keep the position. So your $50 is gone. So that's the difference between isolated and cross. So but most time, if you want to restrict your trade to that particular amount input for the trade, make sure you use isolated so that your balance will not be blown. So under the front, you will see 20x the leverage. So we have many levels. We have 10x, 20x, 100x, 50x, and others like that. 50 years and others. So now let me explain the leverage for you. If you are using, assuming now you are using a 10x leverage, you are using a 10x leverage, that means that if the coin, let's assume I input $50, so $50 times $500 times 10x. If you are using 10x, so $50 times 10 will give $500. That means you are keeping that position of yours with $500, even though you input $50. So that means Binance is borrowing you additional $450 to keep that position. So, but if that particular coin you bought now decrease by 10%, if you are using 10x, that means your whole $50 you input in that trade is gone. You'll be liquidated. This is because you input $50, you're not keeping the position with $500 because you're using 10x that has been multiplied by 10. So that means 10% of $500 will give you 50. So that $50 you input that time, everything will be gone. And also, if that particular coin you bought increases by 10%, that means you'll be gaining 100% because 10% of $500 is $50. And because you're using 10x, which will be multiplied by that 50 of your capital, which makes it 500. So 10% of 500 will give you 50. But you put $50, so 50 of 50, that will give you 100%. So let me explain again. If you're using 10x, if the coin you bought dropped by 10%, if you did not use stop loss, your whole fund is gone. It will be liquidated. But if the coin should increase by 10%, it means that you are gain 100%. Do you understand? And if you gain by 20%, 30%, something like that, that's how it continues to decrease. As far as the coin you bought is increasing, it will continue to increase. But once it drops, if you did not use stop loss by 10%, it is gone. If you use 20x, that means your position is multiplied by 20x by 20. So if any coin you bought should reduce by 5%, your whole position will be liquidated. That position of yours will be liquidated. And if the coin you bought increases by 5%, that means you are gaining 100%. So continue like that. If it continues to go up, so the higher your percentage of return. So the higher the leverage you use, the higher your return and the higher your risk. So that's how it is. So but if you are using cross, so even if it's liquidated, your balance will be cross and then you continue to keep the position for you. So that's it for about it. So but most times I do use 10x. So click OK. And for me, I do use also isolated. Then let's assume I want to buy immediately. You can check my other videos. I've explained about limit, market, stop order, and everything like that. This trailing stop loss means that as the coin is increasing, as the coin is going up, it will be trailing your stop loss. That is, it will be shifting your stop loss upward, and it will be shifting your profits upward also by some percentage. So that's what trailing stop loss stop means. So if you want to buy the coin immediately, market execution, and I want to use the whole USDT I have to buy, you see the available balance there, or under that buy, you see available. So just choose 100% and click buy. It will buy immediately. And if 50%, choose 50, it will buy it. Do you understand? And once it's buy, you just go to other position. You see the coin running. You see there. Then you see at the upper part, or at the upper part of adjust leverage, you see an icon there. So click on it. You can set your step loss and take profit. Or if you click on position, you see different things listed at the down part. You see down part of that trade that you entered. You will see adjust leverage. You will see stop loss and take profit, and so on. So you can click on stop close position and so on. So you can click on stop loss and take profit and use it to start your take profit and your stop loss. Or if you don't want to use stop loss, you can leave it. And once you use take profit, put it. But I want you to know that there is risk in futures, so you must be ready to accept that risk. Do you understand? There is money in futures. There is money. in futures, but the risk is also high because where there is high return, be expecting that the risk is also high too. So you must be prepared for anything that happens in future market. So thank you very much for watching this video. And also, okay, before I go, if it is a coin features you want to do, that is, you have a Ethereum, you have BTC that you want to use, so you come back to this one, you click on, go back to wallet, you click on, instead of USD M, you click on coin M. So you now transfer your coin there, maybe it's BTC or maybe it's ADA or any coin, choose it and transfer. So when you transfer it there, then you can use that coin to place a trade you want to place a futures trade. So that's all about that. So thank you very much for watching this video. Please kindly like this video and subscribe, and also help us to share this video, and also press the notification button so that once any content is uploaded, you'll be notified. Thank you very much.